2023 earnings call. My name is Diana Caterine Ruiz. I am part of the legal department of BBVA Colombia. With us today, the main economist Alejandro Reyes and the ALM and Investor Relations leader, Mario Sanchez. I would like you to remind that today's presentation will be available for download on our website in the section Investor Relations at the link Agenda. Please note this call is being recorded. We remind you that if you want to ask a question, you can use the chat or you can use the raise your hand button that can be found in the bottom right section of your screen. Today's agenda includes the highlights of the quarter, a brief overview of the macroeconomic scenario, a brief description of our financial performance, and our recent achievements. Without further ado, I will now turn over the call to Mario Sanchez.
Thank you, Diana. Good morning, everyone. I am delighted to welcome you all to our earnings result call today, where we will reflect on our achievements in what has undefinably been a challenging economic environment. Let us begin on slide 2. By highlighting our financial performance, our net profit surged to a remarkable 163 billion, a testament to our team's unwavering dedication and strategic foresight. Despite the hurdles posed by a tough economy, we achieved an impressive 50% growth in net loans, showing the resilience of our commercial and consumer portfolios. It is worth mentioning that our operational efficiency remains a cornerstone of our success. With an efficiency ratio of 56%, we have managed to drive a staggering 56% increase in our operational income year on year. Moreover, our commitment to managing risk has paid off, with a cost of risk at a commendable 2.02% and a coverage ratio soaring to 189.17%. I will now continue to our economic outlook on slide 3. On a global scale, the synergy between robust demand driven by dynamic labor markets and the ongoing effects of post-pandemic reopening, coupled with waning supply shocks, will continue to fuel growth through 2023. While signs of deceleration are evident, developing countries' unemployment rates have reached pre-pandemic levels or are even lower, supporting wage growth and sustaining high levels of household consumption, particularly in the Eurozone and the United States. China has emerged as a notable player this year, propelled by the removal of pandemic-related restrictions and surge in dynamic demand and supply. China's resilience has helped counterbalance the slowdown in the United States and Europe, while lower energy commodity prices have easily global production's bottlenecks. Despite inflation gradual decline, underlying inflationary pressures persist due to the recent high energy prices and continued labor market strength. Central banks remain steadfast in their commitment to countering inflation, maintaining interest rate hikes and liquidity withdrawal programs. This approach, combined with tighter credit conditions and potentially less expansionary fiscal policies, could lead to reduced demand and prices. Nevertheless, secondary effects might keep inflation above target, leading central banks to potentially maintain restrictive interest rates longer than market expectations. Looking at the economic forecast, global growth in 2023 is projected to surpass previous expectations, largely attributed to improved activity data. Yet, China's moderation in post-pandemic recovery, restrictive monetary policies, diminished fiscal stimuli, and financial volatility will contribute to general growth deceleration. The global growth rate is anticipated to drop from 3.4 in 2022 to 2.9 in 2023 and remains at 2.9 in 2024. While challenge persists, China infrastructure projects and pent-up consumer demand are expected to buoy its growth in 5.7% in 2023 and 4.8% in 2024. Shifting our focus to the Colombian economy, we observe a managed deceleration. While investment has been a sharper downturn, private consumption and exports continue to drive growth. The support from a robust labor market has sustained household consumption with real wage increases and solid job creation, particularly in the service sector. However, consumption patterns have shifted towards non-durable goods like services and food, while spending on durable goods and tapered off. Colombia's economic performance in 2023 and 2024 will hinge on a continuation of current trends, inflation patterns, ongoing restrictive monetary policies, and the impact of a slowing growth in developing countries. Despite this, the country growth in projects is projected at 1.2% in 2023 and 1.5% in 2024, led by the service sector and supported by government spending and on education and healthcare. But the Colombian economy is navigating a controlled slowdown, with consumption and exports playing pivotal roles as we address challenge and seek to close socioeconomic gaps. It is imperative to seize parallel opportunities, explore emerging sectors, and align policies to foster investment, stability, and equitable development in the global economy. On slide 4, our dedication to innovation has yielded remarkable outcomes, driving a growth of 3.6% in digital customers and 4.8% in mobile customers. It is not just the numbers, but it's also the impact this innovation have had on reshaping our customer interaction that truly matters. We are proud to reveal that a substantial 72% of our value clients are actively engaging with our digital channels, highlighting the deep trust they place in our tech offering. A testament to our efforts, it is the fact that 86% of the sales were seamlessly executed through the website and app, showcasing the ease and convenience we bring to our tech-savvy clientele. This journey has been more than just about numbers. It is about our commitment to understanding and catering the evolving needs to our clients. We have harnessed the power of innovation to not only adapt but to thrive in a digital-first landscape. Our ability to provide seamless experience and sophisticated our position as the financial partner of choice. Let us now address some key financial indicators on slide 5. In the face of a formidable challenge such as 35% decline in net interest income and a substantial 77% reduction in the net income year-on-year, our unwavering dedication to fortifying our core operation shined through. This challenge backdrop prompted a proactive 30% elevation in the net provisions, accompanied by a notable 34% uptick in operational costs. Amidst these trials, what is were underlying in our remarkable ability to maintain a tight rein of operational costs. These accomplishments within such demanding economic climate stands as a clear testament to our steadfast commitment to a disciplined and prudent approach. This measured strategy has enabled us to navigate turbulent waters on the economy while staying focused on enhancing our operational resilience. Remarking our business activity of the group on slide 6, the gross loan portfolio closed at an impressive balance of 74 trillion, reflecting a 50% year-on-year growth. What is even more inspiring is that the net loan portfolio achieved a growth of 14.5%, reaching an encouraging balance of 70 trillion. Despite the year-on-year growth moderating slightly, it is important to highlight that the progress made, especially in the commercial loan segment, with a remarkable 22% growth and a noteworthy 10% growth in leasing. The positive trajectory of this segment can be attributed to the economic recovery that has unfolded during this period. The strategic focus of BBVA Colombia group continues to center around the particular segment, which accounts for a substantial 56.7% of the gross loan portfolio as of June 2023. It is truly heartening to note that this segment has exhibited an impressive 11% year-on-year increase, culminating in a balance of 42% billion during the second quarter of 2022. Our mortgage portfolio, representing 20% of the gross loan portfolio by the close of the second quarter of 2023, recorded a growth of 4.2%. This surge is a testament of our adaptive approach in the current market scenario and a successful outcome of our strategic banking closure. This results in a 14.5% increase in the total outstanding portfolio, aided by the delayed risk management by our teams and a remarkable resilience displayed by the economy in the surmounting the hurdles in this path. In summary, these accomplishments speak to the commitment of our teams and the strategic direction we have embraced. As we move forward, we remain dedicated to maintaining this momentum and leveraging these positive trends to continue serving our clients with utmost diligence and care. On the other hand, on slide 7, our client resources have been managed with precision, aligned with the bank's liquidity requirements, demonstrating our commitment to fostering a robust financial foundation. Total client resources surged by an impressive 5%, culminating in an outstanding 73 trillion. A remarkable highlight is the substantial 43% year-on-year surge in term deposits, a testament to the unwavering trust our clients place in us. This surge further fulfilled the dynamic resources trajectory. In parallel, while transactional deposits, including demand and savings, experienced a 14.8 dip, they closed June 2023 with a notable balance of 37 trillion. These transactional deposits continue to be cornerstone, representing a significant 52.8% of the total client resources. Turning to our investment securities, despite an 8.9 variation compared to 2022, the circulation of investment securities stood at an impressive 2 trillion by the end of this quarter. This nuanced trajectory reflects our prudent approach to managing these assets in a rapidly changing economic landscape. Moving forward on slide 8, our group's commitment to prudent risk management is a cornerstone of our success. This approach empowers BBVA Colombia to sustain its commercial operation while upholding strong indicators of portfolio quality and judicious risk profile. As of the close of June 2023, our portfolio quality indicators proudly stood at 2.74%. Furthermore, our delinquent portfolio coverage ratio reached an impressive 189.70%. These achievements underscore our dedication to responsible banking practice and unwavering commitment to providing enduring value to our clients and stakeholders. Moreover, on slide 9, we have zoomed to the state of the deferred loans due to COVID-19. After the payment assistance period, we swiftly resumed recovery activity, embracing a spectrum of alternatives such as restructures, foreclosures, and litigations, all aiming to ensuring the best outcome for our value clients. With these loans necessitating fresh approach, we now restructure them in stage 3, underlying our proactive approach to adapt to evolving circumstances. In navigating the challenge stemmed from the pandemic, induced credit relief, our resilience shines through. A commendable 42% of the granted relief have been successfully amortized, and an impressive 42% of our existing loans are maintaining their impeccable track record, a testament of the determination of our clients. While 10% are facing temporary obstacles, a 5% have been quite enough. Our commitment to support and assist remains unwavering. Continue with slide 10. BBVA Colombia has successfully completed the transition from coverage to solvency standards. This is a testament of our commitment to excellence. This strategic move places us in the prime position as a pivotal systemic institution underscored by a minimum total solvency ratio of 11.5. These achievements speak volumes about our fortified capital position, which not only surpasses regulatory requirements but also empowers us to embrace our growth journey with confidence. Moving forward, slide 11, BBVA Colombia actively distributes to both includes growth and climate action. This dedication is evident in our efforts to enhance the social well-being of Colombians. We allocate resources to bolster infrastructure, inclusively entrepreneurship and housing. Simultaneously, our commitment to climate actions drive us to allocate resources to impactful initiatives that foster sustainable mobility, energy efficiency, renewable energy, and the circular economy. Additionally, our unwavering commitment to innovation led us to partner with the International Finance Corporation IFC to announce the launch of Colombia's first ever blue bond at the 2023 Banking Convention. This noteworthy $50 million bond will fund projects like water treatment plants, ocean preservation, moor protection, and mangrove conservation. BBVA Colombia is steadfast in supporting our nation's ambitious environmental goals through the consistent promotion of sustainable financing, reflecting our dedication to sustainable development. This landmark operation is particularly significant considering Colombia's abundant water resources, positioning as one of the 5 nations with rich marine diversity. Colombia's strategic geography spans coasts along 2 oceans. It is aquatic ecosystem, including freshwater and marine coastal environments, underscore the country's natural wealth. The present, the presence The presence of vast Andean forests covering 9.6 million hectares plays a vital role in regulating water resources, benefit cities and communities, with over 280,000 hectares of mangroves contributing to carbon capture. This reflects our commitment to a sustainable future that values and protects our invaluable natural resources. During the second quarter, BBVA Colombia continued its steadfast dedication to enhancing lives through a range of social investment initiatives. These efforts positively affect over 90,000 individuals in education, environmental sustainability, and SME support areas, resulting in a total aid of more than 800 million pesos. On slide 12, we can see the highlights of the impact in Colombian society. Volunteer involvement. A volunteer company engaged 113 participants across 5 educational institutions, delivering benefits to 7,412 students. Additionally, 46 volunteers participating in planting 250 native trees in La Calera. SME empowerment. The successful conclusion of the second phase of the Global Leaders Program in collaboration with the University of Los Andes led to certificate of 360 microbusiness leaders. A partnership with the University of La Salle furthered the circular economy project enhancing waste management practice for 43 SMEs. Educational assistance. The distribution of over 10,000 school kits nationwide support students in their academic journey through the year. Scholarship programs provided opportunity for 21 young individuals to the transforming realities, 8 through Manos Visibles, 5 Afro-descendants, young women via ICESI. Additionally, 9 schools underwent renovation, benefiting 287 students. More conservation. Through collaboration with Biocuenca, significant strides were made in conserving, restoring, and promoting sustainable production across these 3 MURs. Intervention in 46.5 productive hectares, 19 conservation hectares, and 50 restoration hectares approach the projects as goal by 96%. Directly benefit 74 individuals and indirectly impacting over 700, thereby strengthening the regional water security. Our planned remarks for the second quarter of 2023 are now complete. We expect to continue to improve the bank's performance through our digital and sustainable transformation and to make the opportunities of this new era available to everyone, seeking to meet the vital objectives of our customers, being a driver of opportunities and having a positive impact on the lives of people and on the business of companies, bearing in mind the 6 strategic priorities that help to fulfill this vision.